Live at TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Just another day out here. Not a lot of action, a little going to try to move down 4 points on the S&P cash. Less than 2 billion shares on the New York Stock Exchange consolidated tape as we start the show, so volume is light. It is a Friday, not a lot of movement out here, so not unheard of. And again, we're in this kind of extremely narrow trading range. One of the things I did learn from my friend Tim Ord, and he talked about it on TFNN when he was a guest many times, is that you don't want to see a market just hang around at highs. And this one is doing exactly that, just kind of hanging out, going sideways. Normally, you get a nice big move in it. And, of course, we'll see what happens next week, but it certainly seems like we're building up some steam to go one way or the other. I would suspect that this market is waiting for political news next week to die down. If that does not turn into an all-out nuclear war, then we're probably good till the end of the year. So maybe you have a few more days out here of going sideways, but I guess from what I read in the newspapers, maybe Tuesday or Wednesday, most of this will be known. And, of course, once everything's known in the market, probably not a lot is going to change. Once it's in there, you're going to get the 1 day of volatility and then the movement. So we'll see what happens next week. I think that's pretty much what we're looking for. On the political front, there isn't much else to really speak about that would be a big problem for the market in the last, last 45 days of the year. I'm going to probably call it that. Of course, we get, starting now, the volume is probably going to start pulling back a little bit. Overall, I'm not expecting any super large days of volume other than the Monday after Black Friday. A lot of times you get a lot of volatility in that, and it's normally a day where shorts that look like they're not going to make it get the data, and if it isn't horrible, then they go ahead and cover their shorts. So a lot of times, a lot of volatility that Monday after Thanksgiving weekend. And of course, a lot of families get together, and whether it's the summertime for 3-day weekends or that holiday weekend for Thanksgiving, a lot of times you see a change in the character, maybe not the direction of the market, but certainly the character. That is, if a market has been very smoothly going up, then maybe it turns into a very volatile up. It can go down too, but generally the character somewhat, or the personality, maybe is a better word, will change. So look for that. But I don't know how much more it can change than flat out here. We're off $2.74 on the S&P cash. So not a lot happening out there. Off 2 points on the NASDAQ. Again, there's two things that can happen when a market goes sideways. One, it's building up energy to go down, or it's building up energy to go up. One of the other things that happens why it goes sideways, though, is it can burn off a lot of overbought or oversold. I had a new position in the daily newsletter that's looking good so far. Nothing to write home about, but I figured it was going to probably take into December. And, of course, the options expire on, the 20th of December. Actually, the last trading day is the 19th. Someone had a question about that yesterday. Of course, options expire the day after, so you have to get them exercised pretty much right after the market closes on Fridays. If you're going to exercise somebody and as they say, put it to them, which I think is why puts and calls, the put part of that came along, because I'm putting it to them and forcing them to exercise my option. But as we look at that particular part of the market, we've got some nice movement. In fact, I had a stock that was nearing my stop this morning, and it's up 10% today. So, in the Tech Insider, so a little happy about that. Hopefully that Tech Insider will be out soon. I was out at the doctor's most of the day, so it is somewhat problematic. I had to do most of the newsletter last night to get ready to be out and about today, but I'm back and in one piece. The doctors didn't do anything to me, which is always good. And I didn't get Ebola, which is, of course, exactly what you get when you go to the hospital. There's nothing else. You can't get a cold or a staph infection. You just get Ebola or you get nothing. That's the way it works today. It's a binary trade. So anyway, what else do we have going on out here? For the most part, we had kind of a pull down, and you get this kind of market where everybody shorts in the morning. They cover in the afternoon, and it's a little higher, 0.5%, 0.5%, 0.75%, 0.25%. And you just get this kind of drip, drip, drip of a market. Oh, there's my drip. Drip, drip, drip. Just drip, drip, drip higher. No one likes the drip. Anyway, so we have to look at that drip, drip, drip higher. And again, we've got a big movement in gold out here, kind of a little, I don't know if it's unexpected, other than the fact that we heard so many. In fact, I was talking to Andy yesterday, and we saw so many big signs that were calling for gold to go down to, or not gold, but crude going down to 30 or 40. So normally that's a good time when you start seeing those kind of things to expect a bounce out of the market. And what else was it? I think it was right after 4 o'clock. I was watching some headlines on cable financial infotainment TV, and it was talking about what are we going to do if it goes down to $40, and how many of these things are going to blow up in our faces because of it. But it is an issue, so we'll keep an eye on it. But gold, little gold bulls out there, up $27 today, $28, 1189.30. So I guess we'll probably have the gold bugs fairly happy. They've been trying to go after the gold equities for a while. Again, from just a brief amount of work that I've done, it looks to me like those gold equities will still be in trouble until we see gold above $1,400. Doesn't mean that they're, basically higher gold prices just means they go out of business at a later date. I was telling somebody yesterday, I can't remember who I was talking to, that I wanted to short gold so bad yesterday that I felt like it was coming out of my eyes. Normally a good indication that I shouldn't do anything, and I didn't. And I will think about that more often. But normally, if I'm not afraid to do something and I have a real burning desire to do it, probably pretty much wrong. If I'm nervous to do it, scared is generally a guy to hear out there. Now, as always, you can email me at path@tfnn.com, or you can, yes, you can call me at 877-927, no, what is it? 877-927-6648. I can only do it if I do it the whole thing. It's kind of like singing Happy Birthday. I have to do the entire song. Happy birthday to, oh, that's my name. Okay. So anyway, give me a call or email me at path@tfnn.com. But looking pretty good so far, so we're pretty happy about that. I'm happy that I didn't short gold, so I've got to be thankful of that. I've got to write all the things I'm going to be thankful for on Thanksgiving, I guess. But I digress. And again, winning the digressing award. Hands down again this year. Hopefully everybody from TFNN will be at the awards ceremony. I think it's a week before Christmas. Combination awards ceremony for digressing of the year, or digressor of the year. but we'll look at that. On this day in 1929, stocks bounce off the absolute bottom of the great crash as a wave of good news hits the market. General Motors announces special dividend of 30 cents per share. Standard Oil of Kansas reinstates its dividend, and the New York Federal Reserve announces that it's cutting interest rates from 5% to 4.5%. The Dow Jones Industrial Averages soar 18.59 points, or 9.36%, one of the best days of all time. And there's always those things that wander around. If you avoid the 10 worst days of all time and are in the 10 up days of all time, what you would make. And it's pretty amazing. So normally the thing is to make sure that you're I think the only thing you can do is make sure that you stay out of markets when horrible things are happening. And generally, market's pretty good at telegraphing that or giving you enough time to get out. Normally, there isn't just one knock on the door and the SWAT team comes in. It's normally, that's kind of a 9/11's kind of a one-off kind of thing. Really don't have many of those black swan events without forward knowledge. Most of the other ones were well telegraphed. The housing debacle, everybody knew that was coming. But kind of like one of those bad slasher movies. The kids always have to go in and lock themselves in the house. They couldn't go over and talk to the nice sheriff over there on the corner with a gun before the guy hacks them to bits. Not a lot of great decisions being made in those slasher movies. Those kids, they just don't seem to have good ideas when it comes to decision making. Anyway, on this day in 1929, things looked a little bit rosier. Everybody was standing just a little bit straighter. Yeah, I like that ad. Yeah, let's hide over there by the chainsaws and all these very sharp objects that might follow us. Bill Gross, we found out now that he left, but he got a $290 million bonus at PIMCO for 2013. That's from Bloomberg. Can you imagine that? Doesn't that make him probably the best paid guy in all of financial? I wonder if anybody made more than $290 million in a single bonus over any year. But it's interesting nonetheless. So we can probably see why he was thinking he was master of the world and yelling at screaming people and finally kicked out over at PIMCO. But I guess we don't have to go around with a tin cup asking for some handouts for him either, do we? I think he's probably sitting fairly pretty. Have to go ask him for some cash. Buddy, Mr. Gross, can you spare a dime? We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Many years ago, I think 2008, something came out called the Buffett Rule. The idea was to see the top 1% pay somewhere around 30% in taxes. In 2011, that was 29%. And in 2013, the CBO today is predicting that the top 1% will pay 33%, which is more than anybody ever asked for. So the burden continues to get higher on those 1%ers. I guess there's many people with many different views of whether that is fair or not. I hope to be 1%er, so maybe that's it. Maybe I'm aspirational, but I don't know. I see people like Jobs and Bill Gates hiring, 200,000, 300,000, 400,000 people, and it's hard for me to get all mad at him. He's giving a lot of people a lot of high-paying jobs, and normally these people with a lot of cash aren't doing the biblical thing of digging a hole in there and throwing it in a pit and throwing dirt back over it. They're actually using it and investing it. So I'm not one of those that thinks that the sky is the limit on taxes, but we are there. In fact, we are there plus some at 33% this year. So if anybody brings it up, you will be well informed on what's happening and whether it matters or not. In the years going forward, for those people reinvesting or moving theirs. And actually, I think the middle class actually went up 1% also. So I thought that was kind of interesting. We talked about Mr. Gross already. There was, I wanted to take a look at this one because I didn't have chance. As I said, I was out It's not Z, it's Z. I wanted to take a look at. One of the stocks, bigger stocks moving out here today is Zillow. And I didn't get to check the headlines for it. I wanted to look at that one rather first. What did they say out here? Oh, got a big fat cat coming in to Zillow down at these levels. And probably starting a little bit of a short squeeze. Didn't get a chance to check, but let's do this real quick on the fly. Z, interest, and let's pull that up and see what the short interest on this thing. 7 days to cover. So, yeah, huge short interest. That's why you've got to watch these short interest stocks. Almost all these stocks that I see having huge intraday movements are and do have some fairly big short interest. And normally this wouldn't be the time or year that I would be buying these tests of higher volume. In this case, this was out looking at the May 8th low at 3.9 million shares at $92. Didn't quite get there, but certainly got into those candles, but higher volume. So it's probably going to come back down here and retest this maybe after the first of the year. But even higher volume, we're seeing a lot of these stocks with high short interest. And this is kind of what I'm talking about for the rest of the year is that, does this get back to 120, 122, or 130? Does it end up taking a lot of those shorts to the cleaner as volume comes out? The answer is, for the most part, yeah. But if you're going to make any money, it's going to be playing whack-a-mole with these stocks and trying to grab them as they pop up. If anybody's played that game of whack-a-mole. I never was any good at it. I'm better at waiting for the short squeeze. And, see, I'm thinking we've got some good positions here. For those people who get my daily newsletter, I did get one option position. One of the reasons I wanted to bring up these short interest stocks is that they are one of the few out here that probably have a floor under them, at least somewhat. And two, I talk often about asymmetrical results. And when we come back, I'm going to play a short clip about what somebody that went out and researched asymmetrical results. But I think it's pretty inspiring, and it is going to be interesting. But of course, you need to get 5 to 1, and there aren't a lot of things out there 3 to 1. Or you need to be able to say, if I lose $1, that I'm going to make 4 or 3 or 5. That number may be different depending on what you're doing, and so I want to bring that part of it up to you too. But we have a motivational speaker who does not live in a van down by the river when we come back. Anyway, give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, we're off 2 points on the S&P cash. So not much happening out there. Did want to bring up at least one thing that I thought was interesting today. Tony Robbins was out. He's written a new book about finances as an investor. Unfortunately, I think he went to the right people, but not all the right people. He said he went to the 50 most successful investors and wrote a book about it. And this is just a small segment of it, but I already had a few people emailing me that Tony at least kind of agrees with me.
You know, all of these investors have something in common, the best on earth. I interviewed 50 of them, the very best that exist in the world, and Nobel laureates, and said, you know, what is it that sets you apart? They all are obsessed with not losing money. Paul's not lost money in 21 years. But the biggest thing is they look for that asymmetrical risk reward. So Paul's approach is, if I'm going to invest $1, is it really a 5-to-1? Am I going to make 5? I'm certainly going to make 5. And yet, like, unlike some talking heads on television, he knows he's going to be wrong. So if I risk one to make 5 and I'm wrong and I can try it again, I can be wrong 4 out of 5 times and still do well. He's not wrong 4 out of 5 times.
And that, if you got into it, is the root of trading. That is that you have to at least have the opportunity when you make your initial trade that it is going to be better and do better than just make you a few cents or a few dollars. There will always be a day when you get a 9/11, and it may not even be 9/11. It may be, as I bring up often to Tom O'Brien, because he was on the air when it happened. I think it was it Paulson? That was somebody else. It was one of the Treasury guys came out midday in 1998, and I think they were down 500 points on the Dow and up 500 points at the end of the day, and it was like 1,000-point range or whatever it was. I remember it because it was only like the first month I had been trading full-time, and it was kind of tough to figure out what was going on. Of course, I was scared. Not experiencing those kind of wild gyrations and know how to actually profit from them, although a couple of years later probably went through a fairly strong trial by fire in the dot-com age. But if there is one thing that you should be watching out there, it is always a asymmetrical risk reward, and he's at least right on that. He's got some numbers that basically only make sense if you start with $1 billion. The old joke, of course, in the stock market is, how do you make a small fortune? Start with a large one. And unfortunately, I have a feeling that he was kind of pushing that 13% per year would be a great return on your cash. And to me, his system in there probably okay, but to me, you'd have to be well swamping that by probably. I think if you trade, you should be looking at a minimum of being and having a successful year at 100%, and somewhere up around 200%. If you can take your cash when it is available to you, I don't think that should be any problem. Of course, he's talking more as an investor, and to a lot of people that are scared of investing in his book. I don't think a lot of that stuff is going to apply, but maybe some of the stuff where he's talked to some of these successful traders does. But I'll read it and I'll let you know if it's worth spending any more time on it. But I thought that little segment was probably worth playing out of all the other stuff he has. I knew a lot of people that were into the Tony Robbins stuff, and there's good stuff about it, a lot of good stuff about it. Unfortunately, a lot of people never get past the absorbing the material and actually implementing it. So, you can have you could have a book with all the futures of the stock prices for the next 100 years. If you don't actually put some money into it, you'd never get anything out of it. Unfortunately, most of the people just love to listen to it and never apply it. So that way, that's probably the worst part of somebody like that. Anyway, not his fault. Actually, the people that don't apply what he teaches, most of it fairly good, most of it fairly borrowed from a lot of people, but not bad. We're seeing a lot of these stocks back up here at these highs, and again, I'm thinking a lot of these gaps are going to be filled. The option position I put on the daily newsletter is all about that, and let me check it real quick here. I've got to keep an eye on some of these things here. Not a bad deal, up 2% today, but we're probably going to see a lot of that, up 1%, up 0.5%, and just over the next 20, 30 days, maybe we'll have some bigger days, but it's not going to be uncommon to start seeing these things just slowly melt up. And if your premium doesn't die too quickly, option positions or call positions, probably not too bad as long as you have a huge short position in them. Bed Bath & Beyond is one of those. I think I brought it up maybe a few days ago, but certainly a lot of these retail stocks that have been highly shorted, not dropping the baby Ruth in the punch bowl, so to speak, but a lot of overhead resistance. So these aren't the stocks I'm going to be buying. I don't think that maybe there's $75 in Bed Bath & Beyond, but I'm looking for a lot of these either to partially fill or totally fill these gap up over the next 45 days. Of course, it's not going to be uncommon to see right after Christmas what we saw in Best Buy last year. And when we look at that, of course, the whole idea is that things are great, things are great, things are great. Things aren't great, and you get this huge slam down that we had in Best Buy, like a lot of those retailers, somewhere in the first part of January when the truth was told. So right now, some places like Bed Bath & Beyond, maybe a little highly optimistic. I'm thinking that maybe some of the housing stocks out here also probably a little bearish. Again, I'm not going to really be short anything probably until after the first of the year. That we'd have to see some kind of tragic event probably happen next week. If we don't get it by next week, then I don't think that there's much of anything that will stand in the way of a slightly bullish market until the end of the year. And it is, what else do you have? D.R. Horton, has probably done everything you could want to in the world out here. If you were long this thing, I certainly would be out of it. I dislike that the energy that came down from July 2nd all the way to August 7th was fairly large. We've had energy on the way up, but nothing that would make me think that this thing could break out above the 25-23. I would certainly be taking all the cash. You've got a higher volume low than you had on August 7th. The higher volume lows on October 13th. To me, these are the ones that are probably, if you get $25 out of this thing or $25.50, does it go back up here and hit the high? Yes. Would I be trying to get the last 50 cents out of a trade? I don't think so. The risk is pretty poor. We've been looking at Johnson & Johnson. I brought that up yesterday. Some of these stocks really testing highs on lighter volume. Are they going to hang around here? Yes. Am I going to short them? No. This one has a little bit better volume than the last leg down. The September 24th high at 108.77 to the October 15th low at $95.10. Basically had about 15% more energy, 20% more energy back up to this November 13th high yesterday. Down on light volume. Again, I'm not suspecting a whole lot. After the first of the year, could this thing play around from 110 to 111 to 107 maybe between now and Christmas? I think probably fairly good. If we see selling coming off of the beginning of the year, I think this thing's probably going to make a scoot and boogie all the way back to 102. Again, you can give me a phone call at 877-927-6648, and or you can email me at path@tfnn.com. And, of course, you can also post a message in the den if you would like to give me a heads up. Oh, the Technology Insider is fresh out. I can smell the freshness. I just saw it pop up in my email basket here. So any of my subscribers can instantly go, since I get it about the same time you get it. I actually write it, but send it in the office, and they proofread it and make sure I didn't have any untoward comments. Johnson & Johnson, J&J, again, maybe back down to Ricky, don't lose that number. Or the other one I like a whole lot is, of course, the 877-5309. That the phone companies actually charge a lot of money for that phone number, 867-5309. Don't lose that number. Yeah, 864-5309. Well, whatever it was. That's one of those songs that is into your brain like a brain worm, like out of Star Trek. You can't miss it. LNC is the next stock we're going to look at. Again, a lot of these stocks up here with light volume, and you don't want to be short these stocks that just hang out and go sideways at highs. They are most likely going to run these stocks on you at least for a few days and stop you out in this kind of market. You do have a high volume low again. I just think we're setting up for a move down after the first of the year, and without probably just the wrong season to be thinking about pulling the plug on a lot of these. Light volume on LNC up here will be September 19th high at 2.8 million shares. We came into it with 1.6 million shares on the 11th. But again, these things just kind of go sideways, hang out here up the highs. Any short interest in any of these stocks, I don't think this is one with high short interest, but they're gonna make you squeal before it's all over. So my advice is stand aside. Nutrisystems always does well pretty much in this time frame. I would be watching for this one for a breakout. The energy is certainly much better on the way to the top up here. NTRI is the symbol on this one, November 14th. Of course, today has hit this high. It is over the high of July 29th. And, if you're playing intraday and trying to get some of these stocks, I'm not a big fan of it. But you break this one, and guess what? The move is up to $20.54 for the long-term November 4th, 2013 high. And, this thing's been kind of moving up. And, of course, a lot of people are going to be pigging out come Thanksgiving and Christmas. And these things, those ads really start to fly with, Donnie and Marie Osmond. Marie Osmond. And the other girl that used to be married to the guy from Van Halen, Eddie Van Halen. I forget her name. Valerie Bertinelli. Ooh. She was always the one I had the crush on. But anyway, there's one to look at. Proof Point, PFPT. Another one up here at the high. Oh, no. My engineer says that he has a crush on her too. I'm gonna have to make sure that she doesn't confuse him with me. She'll throw rocks at him after she's met me, I'm sure. Anyway, PFPT, March 5th, 1 million shares, $45.66. We've gone over that. We've kind of come back out here. Even the volume of being 40% out here is really not making this thing come back fairly far. But, these are some trades that you really want to be thinking about into the new year, because a lot of times these things are going to be some fast money to the downside if all they do is go sideways and no one decides they want to jump in on January 2nd or 3rd. In fact, what is that? Well, let me get the calendar up here. I got to get my calendar. What is that when we come back? January. Okay, January 1st is a Thursday, so Friday's the 2nd. So I'm on vacation for those 2 weeks. I don't come back to the 5th. So my guess is you're probably not going to have a lot of action on that 2nd of January. You're probably going to see some volatility come back in on the 5th of January. So you're going to have a quiet 2 weeks the last 2 weeks of the year. Anyway, Proof Point, one to keep an eye on out here. But again, my guess after the beginning of the year. But you want to start getting a notebook down and watching these stocks or putting stock lists together. A lot of days people just like me will take that 2nd and be on vacation. I think on the vacation from the 19th of December to the 5th. Although I'll still be writing my newsletter, I won't be doing my daily show. I'm preparing some special shows to air during that time, so you'll get maybe some life lessons in the stock market during that time. Another one out here is Sofu Holdings Limited, S-Fun. And let's get the profile on this. I'm pretty sure this thing's one of those Chinese stocks. Operates real estate internet portal in home furnishing and improvements in the People's Republic of China. So it is transparent as mud. Who knows about it? I won't be playing it, but certainly if you're looking for a Chinese stock out here, this one did pop up in my scans June 13th, $8.52, 35 million shares, 11 million shares just a couple of days ago, and things starting to move up. Check the short interest on this one. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Water torture, and we're off 2.5 points on the S&P cash, but the drip just continues out here. 2.24 billion shares on the New York Consolidated Tape, so volume's going to be light. We had about 3.5 billion shares yesterday. I'm figuring this is going to look like 3.1 billion shares. So getting back to the Friday light days, of course, no lack of pop out here in gold, 1188.10 up $26. So nice move out here, but kind of right up against resistance. We've been seeing kind of a pattern of people kind of buying gold on Friday and selling on Monday. I suspect the proof of the pudding of whether this is going to stick, we'll have to wait till Monday. But will be interesting to see whether or not, since crude has been taking such a beating, no one wants to be in it anymore. Are they buying gold for the weekend now? But I digress. Anyway, I couldn't get this song out of my head. It's one of those songs that you get started, but it's 8675309, Jenny, written by Alex Call and Kim Keller. It was performed by Tommy Two-Tone. I don't think he had another song other than that. But boy, talk about a song that sticks in your brain. Can't can't keep it out. Got a few stocks to look at here. TZA, kind of interesting in that we are down here. This thing's kind of going sideways, but not really giving us a lot of direction out here. And again, you kind of have to be a little wary about it because it did have higher volume down here at this lows. The September 3rd low was at 1381 with 14 million shares. And basically, you started getting some decent volume out here, but 22 million shares on the 31st. So you basically broke that previous low. You kind of got into it. It's going sideways out here. But even these bear shares on the directions, not doing a whole lot for me just yet. I'm not getting a warm and fuzzy feeling that anything's going to change before the end of the year. And, of course, you've got that high volume low at 1321. At 25 million shares. So if you compare it to that one, 16 million shares. So it is a lighter out here. But again, you'd like to see in the next couple of days here some real follow-through in volume. And right now, all the stuff I'm looking at is all these stocks coming back up and hitting these gaps on light volume. So TZA maybe back up to 14. It could be. But I'm going to have to see some volume in these things and some real movement in this market that we are not getting right now. What do we have left here? Well, getting to the end of the show, of course, I see Tom O'Brien warming up in the bullpen out here. He'll be doing the 3 to 5 hour. I'll be meeting him in the 4 o'clock hour to do the Tech Insider. And we will be discussing various things that happened this week, net neutrality, more about streaming, some other things, a little bit more big picture, I think, this week. Weren't a lot of sharp individual news articles, but we'll see you. If not in the Tom O'Brien Show, then on Monday, same bat channel, same bat time. Remember to sell when you can, not when you have to. And we'll see you in that 4 o'clock hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.